that seems to be changing, at least today.
Oh, absolutely. So let's kickstart the show. We have lots happening in the next 1 hour. We invite Naveen Kulkarni, the Chief Investment Officer of Axis Securities, to discuss key fundamentals and stocks to watch. Naveen, welcome to the show. That's the big question, right? What is ailing banks? I mean, after having a great year, 2022, banks have suddenly collapsed, SBI especially. Do you think that this is a time to be accumulating? Do you think the common narrative is that this whole net interest margin up move that banks have seen has now played out entirely? So things could change this year. Your thoughts?
Yeah, so if we look at banks, typically banks are leveraged plays on the economy, right? So, and the expectations are very, very clear, right? So expectations of slowdown are very clear. And there are lots of reasons why we can think of that 2023 will probably be a slower year. So in that context, of course, high beta plays and leverage plays like bank will see a correction, right? So that's something which is expected. But having said that, the most important factor which is in favor of the banks is, of course, the fundamental strength, right? So as things progress through the year, I think banks should continue to do well. If you look at, let's say, FY24's earnings composition, banks will probably be the biggest contributor to the pie, right? So from that perspective, I believe that at these levels, one should definitely accumulate banks. One can be a little more careful in terms of looking at quality and balance sheet, but otherwise, I still believe that banks should do well over the course of the year. We should see healthy returns coming from the banking sector.
Naveen, I was looking at this CIO memo that you put out, right? I think it's a monthly, release that you do. And I found that analysis pretty interesting on what the so-called smart money in the market is doing and whether the smart money is actually looking at other asset classes. We're talking banks. I mean, let's face it, the benchmark yield is now touching 7.4%. And equities have been just dithering, and we don't know how long this lull lasts. So is there some merit to the argument that there's some asset diversification, asset class diversification that's happening? What are the ultra HNIs doing?
Yeah, so that I think is a very, very clear trend, right? So if you look at the overall context, right? So if I were to talk about, let's say, an ultra HNI, right? So ultra HNI is not just exposed to India; he's exposed to the world, right? He looks at asset classes from Europe, from US, from India, from Japan, right? Everything. In that context, of course, the India equity return expectations have moved up meaningfully, right? So they used to be around 12 to 13%, probably a year back. Those numbers have shifted to around 15 to 16%, maybe 17% also, right? So the expectation of return from Indian equities has increased, primarily because the let's say dollar debt is yielding much higher. Then you add the currency premium to that, and then you add the equity risk premium. We will come to that number of around 15 to 16%. So that definitely means that we would see some bit of diversification playing on, and this will be the painful period, right? This is the painful period that we have entered in the, let's say, next 6 months, and this we'll see people will allocate to different asset classes, and then once the expectations rationalize, we should start seeing money again coming back to Indian equities in a more meaningful manner. Considering the strength that we have, economy is pretty strong. All those fundamentals will start making more sense.
All right. Hi, Naveen. Good morning. This is Pavitra. In this context, when we are talking about the kind of expectations from the Indian market, it is also in large part hinged on the kind of earnings we can expect, right? We were just talking about the Q3 season, which has gone by. There are more misses than hits. What do you think will happen here on? What is the kind of earnings growth that you expect? And how much of a bearing do you think that will have on the market?
Yeah, so as far as the earnings growth is concerned, if we saw the overall composition of earnings for, let's say, Q3, there were misses in sectors like, let's say, metal, summit in oil and gas, right? So those kind of misses we saw, which are primarily sectors which don't get very, very high multiples, right? On the other hand, let's say some bit of consumer staples did actually much better than consumer discretionary also, which are typically the high multiple sectors. Companies like ITC did very, very well. Then, of course, the banking sector did well. So overall, I don't see a meaningful change in the earnings growth trajectory because one sector missing, other sector doing well is pretty much cancelling out the challenges. So from that perspective, we should see a 12 to 13% earnings growth. Question, of course, the challenge will lie with the valuation multiple. We are right now a little over closer to one standard deviation above the mean. So that is still a challenging area. We might see some bit of compression in terms of multiple. It could be in terms of time or it could be in terms of absolute correction. But overall, I feel that market should trend in line with the earnings growth over the next 12 to 14 months.
Actually, that is a very interesting conversation that you all were having on ultra HNIs and where they're parking their money, right? Because I was just going through a Capgemini World Wealth report of last year, and they say that in the Asia Pacific region, the largest contributors to the ultra HNI category has been India and Taiwan. And in the last 1 year, the ultra HNI segment in India has risen by 10.5%. I mean, that's not a small amount. So where do you see these people parking their money, Naveen? You spoke about how offshoring is also a big theme right now. But within the Indian markets, do you see a lot more participation from this category? And if yes, what are the themes or sectors to look at?
Yeah, so the ultra HNIs, as I was saying, or typically, let's say the large investors, the activity definitely has reduced in the Indian market also, right? Because they don't believe that there is significant returns that they want will be achieved in the immediate term. So they are in a wait and watch mode. At lower levels, we'll definitely see more activity happening. Having said that, the sectors which are, of course, going to be interesting right now is that at this point in time, it's not bottom up. That's one theme which is very, very clear. Sectorally, of course, we have banks look good, automobiles look good, some spaces in the industrials look good, right? But I think this is a year one where one has to be very, very careful in terms of the stocks they are picking, and one should be buying businesses and not just playing market cycles. From that perspective, some of these leading sectors, and there are good number of plays in these sectors, which one can look at and one can accumulate and have a concentrated portfolio, which can deliver a sizable return in the next 12 months.
Okay, Naveen, speaking of portfolio, we just have 60 seconds left on this chat. I'm looking at some of the changes that you made. I think in your growth strategy, you've added Praj Industries. And in the contrast strategy, there are quite a few sells. You've sold out of ICICI Bank's ESC, added Wipro, actually. I have to ask you about Wipro. They're slashing salaries for freshers. Just a quick take on that, and leave us with any high conviction bet that you may have.
Yes, so we have a wide range of high conviction bets. So, for example, in the automobile space, Mahindra and Mahindra is definitely a high conviction bet for us. Considering the kind of product launches that they are having, the growth that they are delivering, that's definitely a high conviction bet for us. ICICI, we did cut a little bit of position, but with still a significant overweight on the stock. So that is something which will continue to do well for the next 12 months. You just mentioned Praj Industries. So Praj Industries is one of our favored stocks, which has got the right mindset in terms of solving the problems of, let's say, carbon footprint. They are into renewable energy, right? So they are all into the right spaces. That space, I think, will continue to do very well for the next 12 to 24 months. And I think, considering the order book and everything that Raj has, I think the earnings growth will be very, very strong over the next 24 months. So we are quite bullish on the kind of these names that I just mentioned.
Okay, just one final question before we let you go. Is your sense that this market is going to see a steep fall, or are we just looking at a time-wise correction for the rest of the year? I'm asking because, now there are some serious concerns about perhaps a fall coming through as we head into a global recession. But your thoughts?
So typically, if we are to see a steep fall in the market, that will most likely be short-lived, right? So because the fundamentals are reasonably strong in India, and if, let's say, we go quickly down to something like a 16,000 levels, we might bounce back also reasonably fast. But what I would say in the overall context is that this is a market which will take its own time to actually slowly move up, right? So in the short term, we might see a 400, 500 points correction, and the market might continue to languish for some time, and then start seeing a move up. I don't see huge correction coming for market. That I think I would rule out. But it is going to be a reasonably tough market where the up moves will be slowly coming through, and there will be down moves also, right? So this is that kind of market. Low volatility and slowly ups and downs and things like that, right? So that's the kind of market that we are going to be in.
All right, got that. Naveen, thanks a lot for joining us today and taking us through your call on the market as well as some of these individual sectors that we just spoke about. We do have to get into a short break now. The market, by the way, is at the low point of the day. It's an over 150-point cut that we are seeing on the Nifty. The Nifty Bank almost 500 points in the red. We'll talk more about that, but for now, let's slip into a short break. On the other side, we also have a discussion on the commodity space with Manisha Gupta.